Good evening, ladies and gentlemen. I'm Sonal Khetarpal, editor for SMEs at Financial Express Online. I would like to thank you all for taking time out today to attend this webinar that we are doing as a part of the 15-day digital campaign to celebrate the unabated spirit of MSMEs in the country. As we celebrate their resilience and their role in nation building, it is important to acknowledge that 6.3 crore Indian MSMEs suffer from the credit gap of $380 billion, and almost 40% of them don't have access to formal credit. To boost liquidity in the MSMEs, Finance Minister Nirmala Sitharaman had announced a slew of measures for the sector under the 20 lakh crore Atmanirbhar Bharat stimulus package. The key measures included a 3 lakh crore collateral-free loan scheme, a 20,000 crore subordinate debt scheme, and a rupees 50,000 crore equity infusion through the fund of funds. While the jury is still out to figure its impact on the sector, what we know is the recent survey of local circles found out that 41% of MSMEs and startups are either out of funds or have less than 1 month of funds left. Today, we have with us a set of distinguished panelists to discuss the role government schemes play to help MSMEs access credit, the gaps in the lending ecosystem, the pros and cons of multiple financing options from traditional and new age fintech players, and what can be done really to ensure MSMEs get credit at lower interest. Our speakers for today are, in alphabetical order, Mr. Ketan Gaikwad, MD and CEO of India's first TReDS platform, Receivables Exchange of India, Mr. Rajesh Dubey, Advisor Finance of industry body FISME, Mr. Iyer, Founder CEO of supply chain financing platform Vayana Network, and Mr. Sumant Rampal, Senior Executive Vice President, Business Banking and Healthcare Finance at HDFC Bank. So I would like to start with Mr. Rajesh Dubey, financial advisor from FISME, who works extensively with SMBs to outline why some MSMEs could not avail the government schemes and what are the challenges they face while accessing credit. Mr. Dubey, over to you.
Yeah, I think the scheme which has come from Reserve Bank of India, it comes with a lot of conditionalities. And so many of the small and mid-sized businesses, they find it difficult in fulfilling all the conditionalities to avail that scheme. And also, I think there is also a certain amount of hesitancy on part of the SMBs into the fact that if they might get tagged as one which is restructured and may not be considered in future requirements whenever the funds are required, the banks may think about that they were not that good. And as can be seen from the resolution framework 2.0, where it precludes that one who have already availed of the restructuring package earlier, they will not be eligible again. So that's something which the policymakers have to think about ways and means of providing adequate information that this would not be considered as a negative aspect in case if they need to avail of it. And it's more from the borrower's point of view. I think it is it's an olive branch, or so to say, a lifeline available to the bankers that when the accounts could be classified as an NPA, they get a rope that it can be deferred, they could be restructured. And even Basel guidelines talk about forbearance in extreme cases like this. So this is, I think, the time when the lenders also have to be very, very liberal and reach out to the entities who have not availed to encourage them to avail it, so that there is no stigma attached to it. So that's one thing which I feel that's the reason why the businesses or there is not much of offtake in this. And from the bankers' point of view, I think they could also go and give suggestions to Reserve Bank of India to make it as liberal as possible, so that maximum amount of entities can be covered under this. Because if not now, then when? Because if you are deferring the situation or the problem later, then it will cause more problem. And being an ex-banker, I can think about what could be the hesitancy on the part of the bankers is that they may not be adequately capitalized in case if the hit comes at a later stage. So especially when there is a risk which is there and the amount of risk which is increasing, it would need to be supported by risk capital, not by way of debt capital. By adding debt capital to the borrower's balance sheet, they are actually making it more leveraged when the revenues are falling. And it could lead to eventually servicing problems from the borrowers. So there has to be a capitalization support which is available for the bankers also, for them to go out quite liberally and extend this facility. Unfortunately, the kind of facility, there is not much of clarity whether the capitalization will come. And banks are themselves operating on debt capital. So they cannot use debt capital for giving risk capital. But whatever it is, currently, if it's not being done, cash credit, though temporary in nature, is by all means a permanent capital. It cannot be taken out. And most of the SMBs have taken finances from the banks in the form of working capital facility, which is a permanent capital. So there will be a rollover, there will be and increased servicing obligation without increase in revenue. So there has to be subsequent and multiple rounds of resolution which may be required. That resolution framework would be can be dispensed with only under an assumption or situation where the growth is phenomenal and capital is available to fulfill that growth opportunities which are there for the SMBs. So to that extent, I think there is a need on both the sides to one, remove the stigma, and at the same time on the banks to think about a liberal way of financing SMBs and ensuring their own risk appetite by shoring up the risk capital. So this is my 2 cents on what should be done.
So I guess from here, Mr. Sumant, you would like to, bring in the bank's perspective, given HDFC recently made its announcement that SME business will be the fastest growing segment for them in the next couple of years.
Yeah, so thanks, Sonal, and thanks, Rajesh. The way that I look at it as slightly differently. Our country, the lifeline is, in my sense, SMEs. The population, the thought process amongst the individuals to go out and do something of their own. And that's where the entrepreneurial spirit is very, very high in this country. And just to give some statistics, and this is data which is publicly available. Every MSME consultant talks about this. There are 6.5 crore MSMEs registered with the government. But if you really go back and see how many MSMEs really go out and take formalized credit, it's just about 1.3 crore. So the gap is a good 5 crore MSMEs who don't go out and take formalized credit from banking industry. And I firmly believe, rather than really just focusing on that 1.5 which are on the formalized credit, of course you have to focus on them also, but the bigger focus area should be from all segments, whether it is the entrepreneur himself, whether it is the government, whether it is bankers, whether it is the intermediaries who are basically helping, is to really make these 5 crore plus and growing entrepreneurs to get easy, hassle-free access to funds. And some of the suggestions that we have given on this particular aspect to various segments, whether it is the government, whether it is to regulator, whether it is to various other people, is, now, because thanks to demon which happened, thanks to GST, of course it had its challenges earlier, but now that things have become a little more streamlined, there is a very good, robust movement of money which is happening. Data is available. Use that data. Use that GST data, use that taxation data, use that data to make these 5 crore guys get easy access of capital. If you just see, and let me just give an example. Last year when COVID-1 hit, no banker had a clue as to what's going to happen. We were having sleepless nights for the first 2-3 months as to what is going to go through. Thanks to the government that they came out with a beautiful scheme. Of course, they did deliberation of that with banks, all the people of the ECGLCS. And within the time frame of June, which is the time when approximately June, July, that they kind of released that scheme, to the time you talk of December, we had kind of, used roughly about 1.5 lakh crores of that money, doled out that money to the actual genuine MSME customers. And that is exactly the reason that the second half of last year saw the big jump in businesses. Of course, it was the government support. It was that 20% additional. It was the usage of data which helped banks to go out and do, as Rajesh said, easy access of money without too much of worrying about things, and having the confidence on the entrepreneur that he's taking that money for genuine reasons. So similar kind of a thing, you can use the GST data, you can use that data to let banks know that this 5 crore customer, if he's been paying GST, if there is an increase in GST payouts of the customer, he can get access of a multiplier, 2 times, 3 times, 1 time to the GST as a line of credit without needing to worry about anything, and government is backing it up. Those are the kind of structures, if brought out, will make easy access to debt, and that will bring the economy and the churn much better. And as you know, it's only the churn which helps. It's only about the churn, which really makes life so much comfortable for everybody, for the business, for the banker, for the regulator, which is where I think we all have to do. And we as a bank are focusing on that how we can use data. And that is the reason today, in the last, we are just about a 25-year-old bank, and we've become the second largest MSME bank in this country, is only because we use a lot of this data, we use a lot of this analytics, we use a lot of this information which is sitting with us to go out and help our customers get better credit, get better banking services. And mind you, one last thing before I kind of, move out of this, that MSMEs, and it's not only about credit, people kind of misunderstand this particular position. MSMEs need the right advice in terms of what they should do, whether it is about credit, whether it is about banking, whether it is about trade, whether it is about foreign exchange, whether it is about even making simple things of reconciliation of their accounts payable and account receivable. And if you're able to do that in a structured manner, I think you have infinity as the opportunity. So that's the 2 bit from my side on this.
So 2 important points on, the leveraging digital platforms now that have come up to assess risk when it comes to lending to MSMEs. And also another is the role of services. So before I come to you, I would like to ask Ram and Ketan about, like how TReDS and fintech platforms are using this. And then I would also like to ask Sumant on how banks now are also evolving their how they rate MSMEs, how they assess risk.
Ketan, all yours.
Yeah. So, look, the TReDS platform was basically started with the intention that it's going to be a digital platform. And I would say that, that it has been fairly successful at that. In the sense that, digitally, the data is being used extensively by TReDS platform. Just to give an example, when we started a journey in RXIL, we were actually manually onboarding the MSMEs. Just a very, very simple example. And when we started looking at it, why can't we onboard them digitally? And we started the journey somewhere in 2019, in July, September, we started the journey. And by February, we had already got started, in the sense the moment the customer gives the GSTN number, the CN number, I could immediately get his details from the stack which is available, or the information which is available through APIs. And when that information is available, then the journey becomes very simple. And that actually has helped us during the COVID times, because we were no more under the manual onboarding and we were completely digital. So that helped us. So it helps in the sense that this digitalization of the entire journey for corporates as well as the MSMEs has actually helped during this particular COVID scenario, I would say. And secondly, look, when you look at TReDS platform as a digital platform, in the sense that the moment the MSME onboards the invoices on the platform, either it can come directly physically through that MSMEs, or it can come via a data integration with the corporate. And the moment the invoices come on the platform, the moment it is accepted by the buyer, and the MSME gets the funds the next day. I mean, you don't have anything simpler than that. It's just that the one-time pay and registration process the MSME has to undergo and the agreement has to undergo. But once the corporate is willing, you have the MSMEs getting the payments the next day. And that is something which is different from even a bill discounting in the bank. In a bill discounting, when you talk about it, you have to submit the documents to the bank will check the documents, then they will scrutinize those invoices, documents, and then they will decide based on the credit what has been agreed for you. But here you have a platform which is completely without recourse. You just onboard this. So that is the motto of TReDS platform, that is completely digital, seamless, and the MSME is receiving the funds without any hassles. And that has actually proved its mettle during the last 1 year, I would say. Between the three platforms, the volumes have grown phenomenally, at least 3 times, 2 to 3 times. So that is what I would say, that that has really helped the MSMEs in a big way. So that's, I would say, I would look at digital journey is something which is very important now.
Yeah, Ram, I would like to hear from you on now cash flow lending and the models that are emerging there.
Yeah, I think Sumant touched upon it, right? And Rajesh and Sumant touched upon it. I think, look, there are 3 points to guys kind of remember. I think Sumant made a very valid point that there are about 5 crore entities that are still outside the purview of formal financing. But also the important thing to understand, I think there was a very interesting report that Ambit brought out, right? That said that, look, ultimately, India, there's one problem. If you're born small, you remain small. If you're born micro, you remain micro, right? So the whole idea really from a growth of the economy perspective, and I'm just going to take away from the COVID situation, because otherwise we can talk 1 hour, 2 hours, 3 hours on COVID and issues. I think it's also behoves on all of us to kind of figure out how to break this jinx, right? I mean, how do you get entrepreneurs to kind of start scaling up and going to the next level? So I think there is 2 aspects to it. One is access to capital, whether it be debt, equity, or whatever it is. But second is also what Sumant talked about, a lot of, I would say, advice or facilities or data-driven approaches to kind of make them dream a little bit bigger, execute a little bit bigger, grow a little bit bigger, so that they all move from one level to the other. I think from a Indian stack perspective, public goods stack perspective, I think India is unmatched. I mean, whether it was Aadhaar and the JAM thing, now we have the GEN thing, this is the GST, invoicing, and NBFC account aggregator thing. And then very soon public credit registry. I think we will have probably the most utopian situation of all data being available as a public good, of course available with consent and available to regulated entities, for them to start looking at the data and start putting in cash flow models. And cash flow models, I think, are very useful in trade financing, because essentially the churn, you can kind of figure out what the inflows are, what the outflows are. It may still not be very good from an equipment or a long-term financing and everything else, where you'll have to probably go to financial statements. I think those models are developed. Vayana, for example, we have been at it for 4 years now. In fact, one of the things that we do, well, we don't take credit exposure directly. It's always the banks who do it. We try and keep the book clean, because, ultimately, as a lot of social media platforms are realizing, you're responsible for content also. So even as though we can say we are a platform only and we are not responsible for credit, I think ultimately banks will kind of look at us as a good platform to be in or not a good platform to be in. If they feel comfortable about that, no money gets lost. So I think we also use a lot of data, a lot of models to kind of make sure that every financing that is being done through us, I think really passes some tests to ensure that it can get repaid. And I think that's why we have had 0 default on our platform so far. And I think that's a track record that we are trying to maintain, only because ultimately this 5 crore entities, if they have to come in, and what are these 5 crore entities? They're really your mom and pop shops. They are this 2-man lathe machine operator out of Haridwar, so if I were to put a face to it, it is, either a kirana shop or a small pan bidi dukan, or there's a, lathe operator. What do they have? And so first of all, the ticket sizes are going to be very small. They're probably even going to be smaller than sachet loans that people are talking about. Their, ability to kind of provide any kind of coherent data is going to be very limited. They probably are not going to even be in the GST network. So what are they part of then? And I think the real important thing really for us at least has been that all of these guys are part of a supply chain, right? Who supplies to that pan bidi dukan? It's the large guys like ITC or, Godfrey Phillips, or, it's HUL or whatever it is, right? Can we start with those guys and get right up to the bottom? Right. And ultimately, if you see these 5 crore entities as part of a very healthy supply chain, you actually can model risk very differently. You can model your credit risk models very, very differently. And when you look at them as part of supply chain and you model supply chain risk, I think you can actually end up being very digital, scalable, affordable, and convenient, all of this together, if you treat the entire supply chain as one thriving ecosystem. So, don't look at every single small enterprise, actually look at the entire supply chain and see if you can bind it together. So that's been our approach. Our approach to reach right up to that bottom small little fellow is not to look at him in his isolation, but to kind of look at him as part of an overall very alive, very healthy ecosystem. And then say, look, he's always going to be important as a last mile connect with the customer. Can we kind of get him on basis of the supply chain he belongs to rather than him himself, right? I mean, or herself. So I think that's really the key. And I think that's really where India has to move. I mean, I think two things we have to work on. We have to kind of get everybody to dream a little bit bigger, larger, get to the next level. And second is to kind of be treated not in isolation, but as part of a larger group, because then you can ensure that everybody can get credit in a very equitable fashion. And when I say credit, I don't just mean debt, I also mean equity, or I mean all kinds of capital.
So, Mr. Dubey, I would like to hear from you. We have heard about different models, the innovations that are happening. So, and you have spoken to over 20,000 MSMEs, in the last so many years as you work with associations and with bank and all. So, if you could, through some anecdotal experience, if you could share, what are the real challenges? Why don't these shopkeepers or even a small firm with like 10, 12 employees, why don't they want to access formal credit? What are some anecdotes or examples that you would like to share with us?
See, Ram and Ketan, when they talk about cash flow financing, and when Sumant also talks about the shift in focus from lending to the entities looking at the untapped segment. And if the approach is to identify, look at the cash flow and give the lending, excellent. Something which will help this entire micro and the ecosystem get access to credit. And technology is a great enabler to provide that. And TReDS has shown, and though it has scratched only a surface as of now, even I would feel if you look at the total B2B transactions in the country, and with government being the biggest businessman in the country as the biggest purchaser, if you just add up the government budget, that would be running into lakhs of crores of the purchases that they are making. And TReDS is not yet touched the government segment as such. Only few PSUs. And when I'm saying that they're registered, yes, that's the first step. But then how many of them are actually using it is something which is important. And the volume of transactions which are doing. So why I'm saying this is because TReDS is one great example of cash flow financing. And it's not only touches the service sector, it touches even the traditional MSME, that is the industrial or the manufacturing sector. Over a period of time, what has happened is that the lenders, the traditional lenders, the banks, nationalized banks, and even the private sector banks, they have focused on collateral-based lending. So when collateral-based lending is there, there is always a limitation on the extent to which the borrower can provide collateral. And whenever it is linked to the collateral, there will always be a challenge, because acceptability of the collateral is also important. Willingness is one thing, and acceptability also. Many of the entities may not have adequate collateral to provide. So when we are talking about from collateral to cash flow, or even looking at movable assets. So for instance, if it's a Kirana shop, and if Kirana shop talks about that, okay, I have this stock, I'm offering this as the primary security for lending. If a mechanism can be generated to tap this and see whether, yes, actually it is a fast moving inventory which is moving, and then cash flow, this is the more number of rotation it takes place through the finance, the entrepreneur is able to earn money and he is able to service it. But so long as that is not shifting in the manufacturing space, I don't see that has happened significantly. Even if the cash flows warrant, the lenders are hesitant or reluctant to lend beyond a certain level, because they are linking it with the extent of margin that is available, the security margin, the collateral, whether it is a primary or the other assets which are being provided, and especially very high in the small and mid-size. And when we say that there is a curse that the small remains small and medium remains medium, it doesn't really grow. The one limiting factor is access to capital. There is a limited access of capital which the promoter himself can bring in. So then if for him to grow, he has to depend on the debt capital. And debt capital, if it is linked again to the collateral security, he doesn't find it. So I'll be very happy if the lenders and the fintech platforms and the technology, and especially the GST kind of data which is available, information which is available, bring everyone on the TReDS platform, the SMEs will grow, the economy will boom. That's something which I would wish to see, that yes, we have shifted from collateral based lending to cash flow based lending.
I can see Sumant and Ketan are both laughing and all alert. So, let's hear from them on collateral free loans.
The way that I look at it, yes, Rajesh brought about a very important and a very pertinent point. And very honestly, the way that I look at it is banking or the way business is done is going through, it's at a cusp, it's a change which is happening. So when we are in their middle, you will certainly see the last 20 years where bankers are looking at collateral. But when you look at future, we are all looking at cash flow. And mind you, the biggest change that I'm seeing is that today, the bankers, today the borrowers, today the intermediaries, today the regulator, the ecosystem is talking of cash flows. And that is the biggest change which is happening. If you really go back into history of transactions, and I'm not a historian, so I'm just going by whatever little that I read, is the Lal Bahi Khata of the Marwadi guy in the olden times of money lending was again purely cash flow based only. भैया फार्म में एग्रीकल्चर ग्रो करने के लिए कुछ खरीदना है तो बही खाते में एंट्री लेके पैसा लेते थे, माल बेचता था, वहां से पैसा आता था, कैश फ्लो based lending hoti thi. That is the true way that it will work going forward. And I'm glad to tell all of you folks, of course, TReDS is one such great platform, but within our own bank's ecosystem, what we are doing, that today, with God's grace and work of the team, we have beautiful relationships with all our large corporates. We were traditionally a large corporate bank as HDFC Bank. Those relationships we are kind of marrying and taking it to the next level, whereby we are wanting to go out and help the supply chain of that corporate. The same Tata Motors, the same Levers, the same Nestle's, the same ITCs, the BPCLs, HPCLs of the world, we are going and telling them that basis your data which is sitting on your ERP systems, data which is sitting in your cash flow solutions, we will go out and fund your vendors or dealers. We have a beautiful program in the bank which we call as a Dukandar Dhamaka, where actually our retail branches go out and basis cash flow lending at the street, on the street of any city, go out and give cash flow based lending solutions. Whether it is a 5 lakh limit or a 50 lakh limit or a crore of limit, there is certainly there. Over and above that, I think I would give a lot of credit to Reserve Bank of India on some of the schemes. So if you really see, there is the CGT MSE. Not many people really know about it. Yes, I heard Rajesh talking about the fact that there is a little bit of a challenge in terms of the documentation. But, we all don't want to just dole out money. There is a tendency, the behavioral thought process, and unfortunately, because the legal systems in the country are a little weak at this point of time, they are changing. There is a little bit of a feel, scare, differentiation which is coming up, but that will take some more time. So we need to create some of those barriers which make the borrower understand that he is a borrower. And that CGT MSE scheme, in my view, is a very great scheme if it is executed well, if it is communicated well to the borrower and making him or her realize as to what is that going to be doing. That allows you to go up to 2 crores of limits without any collateral. So the only challenge which comes along, again, that we are at a cusp where the old traditional banker needs to start thinking like this, and the new banker has to start using these technologies to go back to the borrower and say, yes, this is what we are making it available. Why is a bank like HDFC Bank, and I'm again coming back to me, because I have seen, one of the reasons that I'm sitting as a banker 25 years in the bank is I've seen small businesses actually become medium businesses and medium businesses becoming large businesses. So I feel very great about this, that in some form, whether that 1% or 2% or 5%, the bank has been able to add value. And that is where the excitement of being a banker, Rajesh and Ketan and Ram were laughing about being a banker. Believe me, I enjoy being a banker. and that is where that is the beauty, that you are able to actually add value. I'll give you an example. Just COVID times, there's a company in Pune uh, uh, which came out with some brilliant technology on the testing kits. Now, we all knew what was the need. And when we were able to provide them our banking support in less than 24, 48 hours, and they were able to go out and use that and release those testing kits in the country and make the COVID tests easily accessible, there is that little sense that you feel very good about. And that is where the beauty of being a banker. And yes, I'm not saying everybody is like that. There are bad examples also, but we all have to work in that direction. And clearly, I firmly believe MSME, there is nothing to touch them if the cash flow based lending and the GST solutioning and the technology is married beautifully well, and which we are all looking forward to do. And that is the way the Indian banking will work in the next few years.
Okay, so just I would like to talk about a couple of constraints which banks and also SMEs face. One is the external credit rating. The external credit rating, the non-retail segment is anything above 5 crores of lending exposure. Now, when you look at SMEs, an SME by definition is up to now 250 crores of turnover. Now, when you look at going by even ACT committee's formula, it would mean an exposure of 50 crores. Now, when we ask the rating agencies that, okay, what is your rating that you have assessed for loans up to 50 crores? Most of the entities will find either BBB minus, the best rating that they would get, or BB plus. The moment it is BB plus, that falls
below
non-investment grade. Yeah. Which means
no, but Rajesh, but there are, let me try to bring in there. See, the way that the borrower also has to do and the banker also has to do. We have a very robust internal rating model. And I firmly believe that if the borrower and the banker talk regularly, and when I'm saying regularly means once in a month in a formalized manner, when he is providing his basic data of how sales are moving, how stock is moving, how debtor realization is moving, how is the creditor movement happening. These 4 things which have to be discussed. And if there is a 15 to 30 minute good conversation around this, all your ratings will be taken care of. Because there is a very strong sense of advisory work which bankers can do at that point of time, and which is where bankers really come along and bring about the strength of theirs. And it's not HDFC Bank only. I can tell you, State Bank of India, Bank of Baroda, all the banks do it. SIDBI, everybody does it.
I would rather say anyone who understands credit will do that.
Yeah, they will do that.
Yeah.
Absolutely.
One who doesn't understand credit would insist on the collateral.
So I would prefer internal rating than just pure play external rating. There's too much of dependence on that external rating.
No, I would say even looking at the CC statement and how the transactions are flowing, that itself is a big revelation. So you don't have to look beyond that. And when fintech companies are actually working, and I think most of them would look at how actually the cash flow is operating in that account. So the point which I'm saying is that I think that flexibility is available for private sector banks, but not so much for a public sector bank. And most of the SME lending happens in the public sector bank space. And I'm talking about the traditional businesses, the manufacturing companies, where they find it very, very difficult to arrange for the collateral security. And then the second thing is that how the entire ecosystem has not moved in a coherent fashion in the same direction. Now we have changed the MSME definition, but then the delayed payment benefits are only restricted to small scale industrial units. They are not available to the medium sized entities. So the medium sized entities cannot resort to the 3 times of the bank rate, and they're not, mind you, they're not that big enough to afford. And when you talk about the legal systems are not not that sound and great enough to enforce contracts. When a borrower, when a purchaser is not on a TReDS platform, asking him to make payment within 60 days, 90 days is so very difficult. I have so many number of cases where blue chip companies, otherwise AAA rated, AA rated, have been holding on to payment, undisputed payment for more than 6 months. And the banks are also unable to come and help them, because the moment it goes above 90 days, it goes out of the drawing power limit. So it's a double whammy. It's a double penalty which the businessman faces over here. He doesn't get money, he cannot rotate. And at the same time, whatever money is there available is no longer a regular limit. Then it quickly can move into SMA 2, SMA 3, SMA 4.
No. So I agree to you on that sense that yes, there are those dichotomies which are there, but clearly, in any commercial trade transaction, there is always going to be that khichav, and that is where it is called commercial or trade or business. And I think there will always be that issue, but I still believe that with the GST coming in and with the transparency of financial data, what it used to be 5 years back and what it is today, and I believe that will only improvise in the next 2, 3, 4 years. There's a lot of work that can be done by TReDS platforms, by banks, by small financial entities which are fintechs in that sense, and we can really support the SME segment in a big way. We have to create partnerships. That's the way I look at it. So when Vayana comes along, or when TReDS comes along, the partnerships have to be created in such a way that there's a win-win which gets created for everybody. And there are beautiful examples. If Ram says that, okay, you go out and do a corporate tie-up with a Hindustan Lever, and there's a bank which comes along, and if there is a beautiful technological system which gets created for making credit available, why would there be a problem to anybody?
You have been working extensively on a lot of the issues that were raised here, and so would you like to share your perspective? And then probably Ram can pitch in after that.
So it's a beautiful system. So, we all acknowledge that it's a very good system, and it's really finding acceptance among the corporates as well as the MSMEs. But all said and done, there is a lot of transparency which comes along with the platform. And that is something which, if I were to say that, the government doesn't want, I would not say the government, but I would say the PSUs, the central PSUs which are there on the platform. See, the government has very good intention that, the MSMEs should come on the platform. Very clearly, there is a waiver for charges for them to come on the platform. They are very clearly instructed that, that CPSEs also should come on the platform. But they're just registered, and they penalize the corporates. They penalize the MSMEs if they come on the platform, because they don't want the MSMEs to be coming on the platform, because then there is the moment the invoices come in, they have to either have to accept it or they have to reject it, or they can just remain quiet about it. But they don't want that history to be created. But what is happening over here, that over a period of time, what we are seeing is that look, when you have the MSMEs coming on the platform and doing the transactions, there's a digital history which is created, and that is something which can be used for cash flow lending. And that is what is going to be beneficial for the MSME lending. Where you talk about the cash flow based lending, especially when we all acknowledge that look, GST and system is the best thing to happen in India. Although we were criticizing 2-3 years back before it was implemented. But now when we talk about it, there are so many usages about the GST and system that the moment you have a GST and invoice raised, there is a parliamentary committee which has worked upon it and very clearly recommended that, all the GST and invoices should be coming on the TReDS platform. They've recommended to the government that, this is the way you can track, if you have all the GST and invoices of all the MSMEs coming onto the TReDS platform or coming to the banking system, you can track clearly whether the payments are happening on time or not happening on the time. Currently, what is happening is that the MSMEs, there are certain MSMEs who will raise the voice. There are certain MSMEs who will not raise the voice because they want to continue to supply to the same corporate. But at the same time, there is a lot of what I feel is, when we work with the MSME ministry, the various ministries as well as the Reserve Bank, we find that there is a lot of ecosystem which is getting changed, and that is the change which is coming upon. That look, you tell us what you want. That is the kind of discussion which we're having. Where in between, when the parliamentary committee suggested that the TReDS should integrate, the GSTN should integrate, we have had multiple meetings with the GSTN team as well as the ministry, that how can we get the integration between the GSTN and the TReDS platform, because that is where the alternate data will come in from. See, you raise an invoice, you have the invoice on the GSTN platform, and you triangulate it with the bank account statement. You know how many invoices have been raised and how many payments have happened. So that's what will give you the cash flow basis analysis that that you do it. So that is something which is very commendable. What I would say is that, look, it will take some time, but over a period of time, I feel that the ecosystem is completely changing.
I'm hoping so. I'm really hoping so, Ketan.
Yeah.
No, but Rajesh, let me just tell you this.
The fact that ecosystem is changing, and that is what something which I feel very happy about it. That 2 years back that was not the case, but now people are saying, "You tell us what you want." Yeah, Sumant.
Yeah, so I totally take Ketan's point there, Rajesh and Sonal. I have myself seen, and let me just give you some 2-3 anecdotal examples. When you go and talk to the ministry, it's not that you are going and actually they are calling you up and asking you, what is it that we can do for you? We have given suggestions on how they can make GST data available to bankers if a customer today gives you an acknowledgement. So I have a process where if a customer gives me an acknowledgement, and I can pick up data straight from the GST side. The only small little change that is required there is that it is a month or a transaction to transaction or a month to month. We have said, allow us to have data for the next 1 year or the past years. So that is some back-end work which has to do. I think it's a question of a few days, few months, it'll get taken care of. Similarly with ITRs. Similarly with something which is very important, which Rajesh, you brought about, was documentation. Today the problem is we are all going through the whole traditional way of doing documentation of onboarding a customer. Now, yes, cash flow based will sort out 50% of the problem, but there is the other 50%, which is the KYC. There is the other 50%, which is about balance sheets, about ITRs, about projections, what he thinks or she thinks of their business models. We have a process in the bank today that I get all of this data digitally. Now that is possible. It's happening today. The next level is that after you have released after you've sanctioned the facilities, how do you do the legal documentation? So up till the stage of hypothecation, you can actually create a digital document today in the country. The only leg which is remaining is the mortgaging process, because yes, it needs a change in the statute. But the Ministry of MSME is positively looking at working on it. We've given them suggestions, they've given us feedback, and they're working on that. So I firmly believe that all of this over a period of time will certainly see multiplier effect. And end of the day, that is where the biggest gain will happen on the MSME side.
We have also been supporting this. In fact, we are supportive of the central registry idea also. We are supportive of the fact that, okay, every transaction, whether it is discounted or not, should be routed through TReDS. And if it is not routed through TReDS, at least the benefit in terms like, what happens to bank interest. If you don't make it on payment on time, you don't get deduction. So if it is not routed through TReDS, we have gone ahead and said that you don't provide the GSTN input credit if it is not routed through credit. So this is something which the suggestions that we have made, only with an intent that eventually it will create enough information, provide enough confidence to the lenders to move from collateral-based lending to cash flow-based lending. Because today, the large corporates have been successfully deleveraging themselves.
Yeah.
Only because they are able to arm twist the value chain and getting more than normal credit. So one side, you are managing your treasury quite well, but and when you look at the entire value chain, you are adding to the cost. Because when a corporate, when he is borrowing from its banker, he may be getting at 6-7%. But when it's an SME who is borrowing, he will be getting at 12%. So you're adding 6% extra and you're creating inefficiency. So unless if it comes in the value chain properly, and if it gets discounted and cash flow is recognized, we will not see the growth that we are capable of.
So I would also like to use the same point on the importance of cash flow lending to also, would like to hear your insights on how do we then create financial instruments for firms that are unhealthy and in red, because they are also the ones, because if they go into that debt structure and in debt, and then it creates that whole vicious cycle that Rajesh was saying early in the conversation. So, what are the sub instruments that, we need and can create, for specifically these kind of firms?
See, I think, there were earlier some instruments which were available up till 90s. I had seen that quasi equity or sub debt which was quite liberally given by the lenders also. Over a period of time, sub debt has come down. So I think there is a good case that sub debt need to be introduced by lenders also, because unless that's done, you are just calling risk capital by the name of debt capital, and you will have to face the inevitable. Because if you keep on calling it as a debt capital, and if you keep charging it and treating it as a debt capital, eventually it will become an NPA and it will hit you. So
my take is very simple there. There are only two things. Either it is debt or there is equity. And a company which is going through a challenge has to bring in equity. Now, equity can come in from the promoter himself, or there should be institutions, there should be groups, there should be an ecosystem which is ready to go out and put that equity. As Rajesh said in the first part of his conversation, that there should be the ecosystem which should get created, and banks honestly are not the right people to go out and put in equity. But there are ecosystems which can get created. It could be the same large corporate, it could be the same investor, it could be a group of investors, it could be funds which go out and create and put money into this. And for that, the legal framework needs to get a little more stronger, because then the transparency and the whole mechanism will become better. So when Ram or Ketan talk about the TReDS platform or a digital platform or a cash flow based solution platform, the transparency will be more, and the ability to then raise equity to kind of take care of that kind of expansion or that kind of cash flow funding will become easier. So in my view, it's only either debt or equity. I would like to put it slightly more simply in terms of.
I would just like to clarify, when I'm talking about sub debt or through the banks, it's only the delivery mechanism that it is coming. Because
Sure. Okay.
It would be the government or some other institution which would have to be specifically created an institution to fund this sub debt. It cannot come from.
Absolutely.
As I mentioned earlier, that banks find it very challenging to finance risk capital from their own debt capital. It would be harakiri.
Ram and Ketan, I'm sure you have views on this also.
Yeah, so I think, look, I mean, at the end of the day, again, I just want to kind of refocus back on the 5 crore enterprises, right? The unseen, unheard mass of micro enterprises that, I think it's difficult to kind of finance. And I think one structure that is already available today on the retail side is the microfinance concept, right? Where we have taken a collective assurance for an individual borrower, right? And you have to start thinking along those lines if you want to get your 5 crore enterprises in a manner where they're even ready to take debt, because giving debt is an obligation. I mean, it creates obligations, and and at the end of the day, so we released a good business score to a lot of our enterprises, and outside, even enterprises outside our network, and we actually do those 4 or 5 things that Sumant was talking about, right? Every month, what he was talking about, the 30-minute conversation, we actually capture it in a score. We designed that with Criff and put it out there, and it's very interesting to see that these scores are not really a reflection. They are a reflection of economy, but they're also a reflection of a lot of these small enterprises are inability to kind of ride the waves. So they will end up even in a good time having a low score, and even a bad time they will end up with a plateaued score. So it effectively means that you really need to kind of work on these guys in very different ways other than just imposing disciplines of credit. Because all credit kind of brings discipline to it. I mean, no banker is going to give you money if you're not disciplined enough to kind of figure out how you're going to repay it, right? I mean, at the end of the day, that's all. Every bank can declare profits only if there is actually a repayment behavior. So I think you really need to kind of think in very different forms of these institutions. And I think Sumant made a point that, anchors can create it. And I think India will still require maturity among the large corporates and anchor chains to kind of look at this as an ecosystem. And I think there's a lot of work done by the few 5-6 guys that all of us like to talk about, whether it's Tata Motors or any of the Tata companies or, Hindustan Lever, but outside that purview of that 10-15 companies, it's not really widespread, the idea of looking at that ecosystem. I think you will need to start creating structures that then DFI kind of institutions can come in and create the the mechanisms to support them, right? Before the banks can come in. I think one of the big issues that I have at least had, and that actually I'm in sympathy with all bankers. I think banks as a distribution for social good, I think is always a dangerous principle. I mean, unless you treat them as DFIs, then like what we had before, when I graduated out, you had 3 large DFIs and their job was to dole out money, right? And really speaking, only one of them really survived that onslaught, of public good. I think you will really need to get banks coming in when people are ready for taking on the obligations of debt. And that process of getting ready for taking on the obligation of debt is not like you just start a company and you're ready to take on the obligation of debt. So I think you really need to create much early structure. So, in the startup world, we have seed capital, angel money, then Series A, Series B, Series C. To me, debt is something a startup only takes really after we have got our models right. We would never take debt, venture debt, for example, in our industry, unless we knew what the model was and that we are monetizing it and we are able to repay it. And I think the same thing goes for bank credit. You would not want to take bank credit as a mechanism of, capital, unless you're sure you can repay it. So I think there's a whole bunch of work to be done far ahead of this 5 crore enterprises. Look, I mean, the 1.5 crore enterprises were part of formal credit, all the large companies. I think they are all, now caught into the system, and I think they will wade their way through. 5 crore guys, either you figure out structures that you can group them together, become collectively a little like a microfinance unit, a self-help group that, you can do it by geography, you can do it by industry, you can do it by clusters that we have. We have a lot of MIDC clusters and stuff like that, right? You can think of various ways of doing it, or you can do anchor like Sumant talked about, and then create them ready for DFIs to step in and provide them support, get them up the ladder, then make them ready for bank credit. So I think, we really kind of jump into bank credit as our obvious solution to everything. All our schemes are bank credit. All our things are, darbar, loan darbars. And, we very quickly start looking at banks as this money distribution entity. And I think forget the banks, and their P&L. I just think it's a wrong thing to kind of, do it. I think taking credit is responsibility. And, you don't give a 2-year-old kid a loan, right? I mean, you don't give a 5-year-old kid a loan. I mean, the legal age to kind of get yourself into the system to take decisions on your own is 18, I guess, right? Similarly, for enterprises, there has to be a legal age to take credit. I mean, you have to have a certain degree of maturity in your business to kind of get credit, but you need to be supported before you get there. And I think there is a whole bunch of, just like children, you have, daycare centers, you have schools, you have to create that mechanism. I don't think you can get there. And in India, especially, is needed. It's not that every country doesn't need it. I think if you talk about this 70 crore on one side, and then we have only 700 companies above $1 billion of revenue. And we have 70 million companies below 10 crores of revenue. I mean, so we are not talking here about a very nice, evenly spread ecosystem that, we have, if you put them on a seesaw, I mean, this is like, earth to stars. So we really have to kind of think about, I think, a far different way of approaching this MSME problem, rather than talking about schemes and debt and bank debt and, figuring out. I just think, I'm only talking about the 5 crore. I'm not talking about all the rest. So that would be my only limited point.
No, so Ram, sorry, I'm interjecting here, and I agree to you in quite a bit of those points. But the area that I really believe on that 5 crore is that cash flow lending is a very, again, loosed out term for them. There are again various different types, shapes, colors of those entities. And very easily that problem can be sorted out. It's not rocket science. Again, because end of the day, I'm assuming that 5 crore is above that legal age. That's the reason he's been able to think of creating something. And he's, whether it's a mom and shop or it's an MIDC small engineering auto component business that he's created, or he's created a security services business, or he's created a trading business. The way that I look at it is that if bankers or the financial intermediaries, and I'm making the responsibility to the chartered accountants and the management graduates and the bankers all in that space, that if they are able to give them clarity on how do you first put your business in one simple sheet of paper, that one simple sheet of paper in terms of making them understand that this is their actual P&L, or this is actually their profitable position, half the battle is won there. And second, the GST, and I'm going back to GST again and again, because I feel that at some stage, when there is that flow, that entity is part of a supply chain, whether it is a supplier or a dealer or a buyer. He's part of a supply chain. And if it is within that entire ecosystem of the GST, you have a lot of data to kind of go out and use analytics. You have data of how his GST payouts have been or how his GST receivables have been over a 1 year, 2 year, 3 year, 4 year period. Government, in order looking at that data, can actually push banks, and you don't need to create a DFI for this. You can actually give the banking industry, which is flushed with funds, to go out and give some support to bankers. Okay, you may not get the security, you may not know them. We are backing them up because they are paying tax. They are having the transparency of doing it. So we are guaranteeing you, and banks go out and fund them. Now, that is where when the banks go out and fund, there is a leverage which gets created, which is where the position is, that the responsibility of that leverage which is getting created and making them understand that that leverage has to be paid out is the responsibility which bankers and all the intermediaries and the entrepreneur have to take it as a common thing. And the fear of legal system will automatically tackle that. The problem is also that there is a little bit of a challenge with the fear of the legal system, which has changed, mind you. In my view, at least, I'm seeing that in the last few years, there is a change which is happening. And over a period of time, that will further improvise. And the last thing, again, I'm telling you, the 5 crore, all of them don't need credit. What they need is a good banking support in making them, it's like, the South Indian thali. Not everybody just wants to eat the sambar and chawal. They also want to eat the papadam. They also want to eat have the lassi or the chas, and they also want to have the gulab jamun or the jalebi. So it's like that. The banks have to really start thinking in that way. So that's
I agree. Just one point I just want to make, and I think GST is kind of really the important linchpin around which we all are talking about cash flows. But the fact of the matter is that, so we have got about 47,000 Kirana shops in Chennai. Okay. Metropolis, Sonal, I think, your area, right? Out of that 47,000 Kirana shops, only 12 of them are GST registered.
That's
okay.
what we say.
So you essentially don't really have a formal mechanism. You have all the distributors' data about what they have purchased. And actually, so you're obviously take the distributors' data, but that's not a formal data because the distributor, when he's putting his GST return, does not have a GST IN to kind of make his purchases too. So I think sales too, that is. So I think we also have to think a little bit differently in terms of this cash flow side, right? I mean, for the really small guys, and again, I'm talking about the 5 crore guys. I'm not really talking about the GST enabled 1.85 crores who got registered. And I think the second point, I think, Sumant, I agree with you. At the end of the day, I think banks can be all doing the work of the DFI. I just think that they have to understand that this, like your ELCGS or, where people, where government really is giving you a guarantee, or insurance, though it might be 3 years or 25, 75 and all of that stuff. I think at the end of the day, it has to be seen as an infrastructure project. It has to be seen the MSMEs are part of the infrastructure. They are creating employment. They are creating growth. They are creating, scale in the economy. And your 5 trillion economy is really going to be borne by these guys, not necessarily only by large corporates. You have to see it as an infrastructure requirement, and there you can bring whoever you want, banks, everybody else, but you have to treat it as infrastructure. You can't make a road on a whim and fancy, right? You have to think about where it's connecting, toll roads, everything else. I think the same thing you need to bring there. That's all.
Ketan, you have been working extensively on making TReDS a very inclusive platform where it does not just has only the best of MSMEs, the bigger, the medium size, but also micro and small. Would you like to share your thoughts here?
Yeah, in fact, the reach of the TReDS platform is to the 95% of the people who are registered, the MSMEs which are registered, are all micro and small. So that's where we find that the change is coming, that, we find that, these guys are GSTN registered because that's a primary requirement for us, that, they should be GSTN registered. And when they come on the platform, the transactions happen digitally. So yeah, so that's very important. That, and I also tend to agree with Ram, that look, although there are so many MSMEs which are there, but the kind of formalization which is there, it's not there for the MSMEs which are less than 5 crores. I mean, they need not be there on the platform. They need not be there on the GSTN thing. So that leaves these entities outside the purview of the GSTN.
I would just like to add one thing, that what we're talking about is the business model. The one who are there on the TReDS, they are typically the SMEs who are dealing in B2B segment.
You're the MSME sector, yeah.
Yeah, and then when Ram is talking about the 5 crores, they are largely in the B2C segment. So then this inherent characteristic itself is different, then we have to treat them, the risk assessment itself has to be a little different. It cannot be the same.
No, but there, Rajesh and Ram and Ketan, let me try to again come back there on that. Yes, they are not on the GSTN and they don't have that formalized input for a bank or any credit intermediary to go and give a credit. But today, the overall credit monitoring and credit assessment systems have, the TransUnions of the world have created such nice models which can be used, and banks can use that model to go out and give a different form of line of credit to them. So taking that example of the 47,000 Chennai-based retail stores, those retail stores are buying from the Samsungs of the world, or from the Levers of the world, or from the Nestlés of the world, or from the ITCs of the world. There is no other way that they can really even survive if they are not buying from the large or the mid-size. And I'm also taking the mid-size companies of, the Syscas of the world, or the Philipses of the world.
Milky
End of
Mist.
the day,
Milky Mist.
Yes. Yeah. So the point is, there is data which can flow up in terms of the purchases that they are doing. And I can tell you this with confidence, not that I'm saying that we've tried something. We are actually using that basis the purchase data. You can actually go out and create a line of credit and go and tell him. And when you go out and reach out to him and tell him that there is something who's coming to you, you want to use it, it helps you in your business model to go out and churn better, then the guy gets convenience, comfort, smoother workflow. So let me also give you an example. During this whole COVID time, medication or medicines, the whole chemist world was the only world which was open. There was no other world which was open. And they needed that working capital. They needed that cash flow solutioning. And we've kind of worked with pharma companies. We've worked with certain platforms to go out and see how we can create lines of credit on those chemists or stockists basis the behavior of purchases itself. And if that line of credit is made available to the same chemist or the same stockist, without he needing to really go out and approach a bank, because the tendency in the country is, if I go and approach the bank, as Rajesh says, bank pehle bolega collateral la ke. But agar bank is data ko use karke uske paas reach out karega, to then it's a totally different mindset. It's all again a win-win that you're creating. So we can actually create that. And why am I again going back to GST? And then when he sees that I'm below 5, I'm getting this much. The minute I go above 5, I will have to go to GST, but I will be able to churn better. I'll be able to turn out better. I will be able to become a bigger company. The whole thing kind of, plugs in well. And that's the way that I look at it. And that's, some people call it cash flow funding. Some people call it supply chain funding. Some people call it XYZ names. But that's the way that we have to go out and do things.
I think the important point really, Sumant, and you said right, we are at a cusp. And I think, if you kind of forget what's happened in the past and kind of only look at what's all getting built right now in the future, right? And I think PCR is a great thing that hopefully will come on soon, because then it will mean every invoice or every purchase order, actually you can mark a lien on it and it's available online. I think you really unlock a lot of the risks that a banker has to go through, and therefore you can come with pre-approved lines of credit, like you were talking about, looking at data and coming at it. All my limited point really is that ultimately, if we want to be a 5 trillion economy, this 5 crore of people out there, this B2C, B2B, B2B on purchases and B2C on sales, will really have to kind of be, I think, trained to think big. And I think it is the bankers who are reaching out to them, the fintechs or government or whoever it is, someone has to reach out to them to dream big, because otherwise I think we are going to be stuck in this. There's been no census really. Honestly, we are all, when we think about 6.5 crores, I don't know there is actually, and somebody who's gone and counted them. It's I think a statistical exercise. The question really is that we don't even know how many are alive, because some people are saying now a bunch of companies have died due to COVID phase wave 2. I think the key question really is that we need a lot of them to kind of move to the next level. And well, you said, look, you have seen actually as a part of your banker experience, the number of them graduating from micro to small. That has to be every banker's experience, right? And it has to be, and not just bankers. I think, we all kind of think of bankers as the only, Manmohan Singh ji, I think long back said, the only distribution mechanism we trust is banks. I think, now people have taken it as everything. You only trust the banks. I think you have to get to a point where there's a whole bunch of players, TReDS, anybody and everybody who's involved in this platform have to get involved to kind of push them there. I think we just need a little bit of push. A Bombay local train, we have to get everybody into the train a little bit. And I think that's very, very important. Hopefully make them get out also at some point, but I think that's the key.
So that was an interesting analogy after the South Indian thali. So last question, we have time for only one last question. And in that, I would like to hear from each of you, if you could share 2 key takeaways on, what really we can do to make credit or capital accessible for MSMEs. Rajesh, do you want to start?
Yeah, I am all in for use of technology and marrying it with information which is there on the GSTN network. And I would hope that somehow TReDS really takes off, and not only in letter, but also in spirit, including PSUs. They also get onboarded, and I can provide enough anecdotal examples where while entrepreneurs may be afraid of taking on the corporates in the private sector, but they are definitely not afraid on taking on the PSUs, because they know that there will be justice at the end. So that aside, yes, unless these 3 get married, and if the concern is that there may be a possibility of duplication of finance, double financing, then central registry also, which is a part of a technology ecosystem which is getting built in. So that also would help, and it would help. See, if it's something which we cannot see in silos. We have to see that the banks and SMEs are linked together. They are here in completely conjoined, and they cannot survive the other. So an SME, if it is dependent on capital, it needs the bank, whether it is the formal channel or through the fintech. Again, fintech would not be entirely doing it from their own resources. They would be in turn dependent on the banks to fund. So they are very much necessary. And so I think the transparency also which is there, and the transparency is in a way getting established through the use of this technology, GSTN and TReDS. And that is something which I'm really very hopeful of.
Ketan, what would be your last thoughts?
Yeah, so my last would be that my thought process over here would be that, look, there is a need for the MSMEs, who are in the B2B space, that, they should be coming onto the platform, because there are a lot of, misconceptions about MSMEs are also about TReDS is also there in the MSMEs mind. And that is something which MSMEs need to be very clear that, look, this is a platform which is very beneficial, rate discovery mechanism is there, and there is nothing but to benefit. And there's a benefit not only for the MSMEs, but for all the parties over there. That is one thing. But at the same time, look, we need, see, this is only the part of the MSMEs which come on the platform. But I agree with Rajesh also very clearly saying that, look, there has to be a compulsion which should be coming in from the government. Because, when we were discussing last week with the government officials, I would say that, we were discussing with RBI very clearly when one of the ministry official asked that, look, can you please tell us what should be happening? So then she said, look, if you're making it compulsory that 25% of India's procurement or the government's procurement has to come from MSMEs, why don't you make it compulsory that, these MSMEs have to transact on the TReDS platform? So, you can take care of the delayed payments itself. I mean, okay, fine. You might have a cash flow situation with the corporate also, where you allow even the extended credit period for the corporates. So I would say that, look, since I'm coming from the TReDS platform, I would talk about TReDS. But yeah, at the end of the day, what I feel is that the uptick of the TReDS is very important, because the corporates have realized it. And it's very important even for the MSMEs to realize it, and the corporates also to come on the platform, utilize the platform. I think that's I would say the takeaway from my side.
Sumant, your last thoughts?
My thoughts are very simple, that again, credit culture is all about, is going through a massive change, and it's a huge positive for the country. And it will create much better ecosystems for the MSME as a segment. Transparency from both the two ends which is the service provider, and the user, which is the borrower, if that comes in, I think there is infinite opportunities for both the two sets of people. And I again go back to a very simple thing, that if mobile phones can reach to about 100 crore people in this country, or whatever, 80, 90 crore people to this country, why can't bank credit reach out to the same level of people? And that is only possible if there is more transparency amongst the two groups of people. And providing everything together as a basket is what is going to be the solution, which will be the way forward. You can't just be a one single credit related kind of a solution or a provider. You have to be a basket of products. You have to be a group of things as a solution provider that you have to go out and reach out to. That's it from my side. Yeah.
Ram, what would be your two sets of advice for the sector?
I think one, of course, harness the power of the supply chain. I think we all realize that every single enterprise out there is part of some supply chain. So, focus on the entire supply chain rather than just the large corporate and the immediate part of the supply chain that everybody likes to focus on, go right up to the end. Second is that, work at a very infrastructure level for a lot of these smaller enterprises to get together, and become a kind of a self-help group that can then work with, larger institutions to mature. And I think that is the key to me. I agree with the fact that Sumant, what he said, that, finally, if you set up a Kirana Dukan also, you are mature. I think that is one, but it's like, kids, when they go to school, they understand what's being taught. I think they need a lot of scaffolding. I think you need to kind of build it up layer by layer. And I think that's very, very important. And lastly, I think, whatever we do in India, we have to remember we have to do it at scale. India is not a country where it's not a Scandinavian country or a New Zealand or whatever it is, where we can say, 50 lakh log hai, and, we can kind of figure out how to kind of quickly reach out to everyone. We are a large, even on the MSME side, very large numbers. So whatever we do, ultimately, if the cost of credit, and I think that's one point, I think the cost of credit has to dramatically reduce. In the people who want 6%, 7% credit that Rajesh talked about is actually the MSMEs, and not the Tatas and the, Ambanis and everybody else. The lowest guy actually has got the least profit margin. He needs to kind of get money at the cheapest rate. So you figure out every single mechanism that can get them the cheapest rate. I think that's the only way to make them grow. One should grow to higher interest rates. It's like you grow to higher taxation rates as you make more money. You actually should be, the smaller you are, the less interest rates you should pay. And whether that comes through government kitty, I'm not saying banks have to do it. I think, lastly, I think, my favorite point, banks are not the only distribution mechanism in the country. You have to think in multiple ways of reaching out to everybody.
So you're turning the system on its head, huh? Okay, interesting.
I have been trained only to disrupt. I have not been trained for anything else. So I what to do.
Great. So thanks a lot, gentlemen, for some very interesting perspective on the need for collateral-free loans, the need to focus more on cash flow lending, and also to even look at MSMEs in this entire cluster-based model for lending. And thanks a lot for your insights on how to solve this big problem on making capital accessible to MSMEs. Thank you for your time today.
Thank you. Really pleasure interacting with all of you guys. Thank you. Bye. See ya.
Thank you. Take care.